As of today, Sunday, January 18, 2026, the market is closed for the weekend. The last recorded trading price for ImmunityBio, listed under the ticker IBRX on the Nasdaq, sits at $5.52 USD. This figure represents a massive single-day jump of $1.57, which is a gain of 39.75% during the final trading session of the week on Friday. Seeing a move like that on a Friday afternoon usually means a lot of eyes are going to be on the pre-market action come Monday morning. While many retail investors were busy looking at the standard tech giants like Tesla stock or Apple stock for their usual volatility, ImmunityBio stole the spotlight by closing at its highest point of the week with an incredible surge in trading volume. The immediate reality that most investors missed while they were focused on the steady gains of Nvidia stock or managing their holdings in a Schwab Intelligent Portfolios account is that ImmunityBio just validated its entire commercial existence in a single afternoon. The expectation for a long time was that this company was a perpetual cash burner with a science experiment that might never see the light of a profitable day. The reality we saw this week is a 700% year-over-year revenue surge driven by their flagship drug Anktiva. When you see a biotech company pivot from theoretical clinical data to over $113 million in preliminary net product revenue for the 2025 fiscal year, the narrative changes from speculative to structural. This isn't just about a good earnings report. It is about a fundamental shift in how the market values a company that was once considered a high-risk, low-certainty play. To understand why this move is so significant, we have to look at the sheer scale of the volume on Friday. About 182 million shares changed hands in just one session. For a mid-cap biotech, that is a liquid flood. It suggests that institutional players are finally moving in. When you're looking at online investment platforms, or even just checking your individual brokerage account, you rarely see that kind of conviction unless a major piece of the puzzle has fallen into place. In this case, it was a combination of that massive revenue beat and the news that their critical Quilt 2.005 trial for bladder cancer has already cleared 85% enrollment. They're expecting to finish that enrollment by the second quarter of this year and file for FDA approval by year-end. This creates a clear timeline for catalysts that most traders can actually trade around, rather than just hoping for a random press release. Think about how most people approach online investing these days. They look for the big names they know, or they let a robo-advisor handle it through something like a SoFi robo-advisor or Fidelity Wealth Management. But the real gains often happen in these smaller, targeted biotech names that are solving specific, massive medical problems. ImmunityBio is working on non-muscle invasive bladder cancer, a market that has been starved for innovation. They aren't just making a slightly better drug, they're building an entire platform around natural killer cells and T cells. If you've been doing some self-investing or using various investing sites to find an edge, you probably noticed that the biotech sector has been largely ignored while everyone chased the artificial intelligence trend. Now that capital is starting to rotate, and IBRX is standing right in the path of that rotation. Most people believe that clinical-stage biotech companies are just a gamble. That's the common ground. It's easy to look at the losses and the high burn rate and say it's too risky, but the contrarian take here is that the risk is being rapidly de-risked by real-world sales and international expansion. Just this week, the Saudi FDA gave accelerated approval for Anktiva in 2 different indications. This is no longer just a domestic story. They're opening up global markets, and they're doing it with a drug that has shown a complete response duration of over 47 months in some cases. When you compare that to the standard treatments that have been around for decades, you start to see why the market cap is beginning to swell. Now, while you're processing these numbers, I want you to take a second and participate in the discussion. Comment below how many shares of ImmunityBio you currently hold, or if you're planning to add more on Monday morning. I'm curious to see if the community is leaning bullish after this revenue beat, or if you think the 40% jump was a bit too much too fast. Looking at the technical side of the movement, the stock actually swung between $4.09 and $6.44 during that heavy Friday session. That's a massive range. It shows that there was an intense tug of war between short sellers covering their positions and new bulls trying to get in before the next leg up. If you use a Fidelity trading platform or the Robinhood app, you might have seen the volatility alerts hitting your phone. This kind of action usually leads to a period of consolidation, but with the news of the 700% revenue growth still fresh, the floor for this stock might have just moved significantly higher. Analysts have already started raising their price targets, with some looking toward the $10 to $11 range. Compared to where it was just a few weeks ago, that's a huge vote of confidence from Wall Street. The business model for ImmunityBio is actually quite interesting when you look past the stock ticker. They're a vertically integrated company, which means they handle everything from the initial discovery and clinical trials to the actual manufacturing and distribution. They even have their own state-of-the-art manufacturing plant in New York. This is a big deal because many biotech firms have to outsource their production, which eats into their margins and creates supply chain risks. By owning the process, ImmunityBio can maintain better control over their costs and their quality. This is a point that is often missed by people just looking for investment help or searching for quick trades on a Robinhood stock trading screen. Long-term stability in biotech requires being more than just a lab with a patent. It requires being a full-scale pharmaceutical company. The company's lead product, Anktiva, is what they call an IL-15 superagonist. In plain English, it acts like a booster for the body's own immune system, specifically targeting natural killer cells and memory T cells. This is different from traditional chemotherapy, which often just attacks everything in its path. By focusing on the immune system's natural ability to fight cancer, they're aiming for longer-lasting results with fewer side effects. The recent data they released for Waldenstrom lymphoma also showed a 100% disease control rate in the first few subjects of a small trial. This shows that their platform might have applications far beyond just bladder cancer. It's this potential for a multi-indication platform that gets institutional investors excited enough to move 182 million shares in a day. If you're using Interactive Brokers Trading or a SoFi trading platform, you know that the macro environment still matters. High interest rates have been a weight on biotech for years because these companies need a lot of capital to survive. But as the market begins to anticipate a shift in the interest rate cycle, these capital-intensive businesses become much more attractive. ImmunityBio has about $242 million in cash reserves, which gives them a bit of a runway, but they are still not profitable. This is the reality that balances out the expectation of high growth. They're spending a lot of money on research and development, and while that spending decreased slightly in the most recent quarter, it's still a significant drain. We should also talk about the competition. Companies like Incyte and Vertex Pharmaceuticals are also major players in the oncology and specialty drug space. On the same day that IBRX was up 40%, many of its peers were actually trading flat or even down. This shows that the move in IBRX was idiosyncratic. It was based on its own specific merits rather than just a sector-wide rally. This is usually a sign of a high-quality move. When a stock can decouple from its sector and move purely on its own news, it tells you that the market is finally paying attention to the specific value being created there. For those of you managing your own portfolios, whether it's through Fidelity IRAs or a Robinhood cash management account, the key here is to watch for the follow-through. A 40% move is great, but can they sustain it? History shows that these kinds of explosive moves often lead to a pullback as early investors take their profits. However, the fundamental news of a 700% revenue increase is hard to ignore. It provides a level of support that wasn't there when the stock was just trading on clinical hopes. The expectation was that they might reach $100 million in revenue eventually. The reality is they did it much faster than anyone anticipated. Looking forward, the catalysts are clearly lined up. We have the full enrollment of the QUILT 2.005 trial coming in the second quarter. We have the potential BLA filing by the end of the year, and we have the ongoing sales of Anktiva as more urologists across the country begin to use the drug. They recently secured a permanent J code for the drug, which makes the billing process much easier for doctors and hospitals. This is one of those boring administrative things that actually has a huge impact on sales. It's often the difference between a drug that stays in the lab and a drug that becomes a commercial success. There are still risks, of course. The company's Altman Z